This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell around 3% in 2024, slipping for a second straight year. As the post-pandemic demand recovery stalled, China's economy struggled, and the U.S. and other non-OPEC producers pumped more crude into a well-supplied global market. Brent crude futures on Tuesday, the last trading day of the year, settled up 65 cents, or 0.88%, to $74.64 a barrel. U.S. West Texas Intermediate, WTI, crude settled up 73 cents, or 1.03%, to $71.72 a barrel. The Brent benchmark settled down around 3% from its final 2023 closing price of $77.04, while WTI was roughly flat with last year's final settlement.
U.S. oil production rose 260,000 barrels per day, BPD, month-over-month to a record 13.46 million barrels of oil per day in October as demand surged to the highest levels since the pandemic, data from the U.S. Energy Information Administration showed on Tuesday. U.S. oil output has grown rapidly this year as drilling operations became more efficient in the country, even as concerns of oversupply have weighed heavily on prices for the commodity amid weaker than expected demand growth, especially in China, the top oil importing nation. Year over year, U.S. oil production rose 2.3% in October, while West Texas Intermediate, WTI, crude futures prices averaged 16% lower during the month, according to Reuters calculations. WTI and global benchmark Brent crude are on track for their second consecutive annual losses in 2024.
Moving on to the top news in the energy sector.
Russian natural gas exports via Soviet-era pipelines running through Ukraine to Europe were halted in the early hours of New Year's Day as a transit deal expired and warring Moscow and Kyiv have failed to reach an agreement to continue the flows. The shutdown of Russia's oldest gas route to Europe ends a decade of fraught relations sparked by Russia's seizure of Crimea in 2014. Ukraine stopped buying Russian gas the following year. We stopped the transit of Russian gas. This is a historic event. Russia is losing its markets, it will suffer financial losses. Europe has already made the decision to abandon Russian gas, Ukraine's energy minister German Galashchenko said in a statement.
Oil prices are likely to be constrained near $70 a barrel in 2025 as weak demand from China and rising global supplies are expected to cast a shadow on OPEC+-led efforts to shore up the market, a Reuters monthly poll showed on Tuesday. The survey of 31 economists and analysts predicted that Brent crude would average $74.33 per barrel in 2025, down from a forecast of $74.53 in November, marking an eighth straight downward revision. The global benchmark Brent crude has averaged around $80 a barrel so far this year and was poised for a 3% yearly decline on weakening demand stemming from top importer China. Next, we have the top news in metal markets. China's net gold imports via Hong Kong in November more than doubled from October, marking the highest level in 7 months, Hong Kong's Census and Statistics Department data showed on Monday. The world's top gold consumer imported a net 33.074 metric tons in November, up 115% from 15.414 tons in October, its highest level since April 2024. Total gold imports via Hong Kong were up 60% at 45.22 metric tons from October, posting its highest level in 8 months.
Iron ore futures ended the year with a drastic loss of more than 15%, as faltering demand, thin steel margins and high portside stocks in top consumer China weighed down prices of the key steelmaking ingredient. Prices were range-bound on Tuesday as caution mounted up after China's latest factory activity expansion slowed. The most traded May iron ore contract on China's Dalian Commodity Exchange traded 0.78% higher at 776 yuan, $106.33, a metric ton as of 0245 GMT.
We will now look at the top news in the agricultural sector.
China has approved 5 gene-edited crop varieties and 12 types of genetically modified soybean, corn and cotton, expanding approvals to boost high-yield crops, reduce import reliance, and ensure food security. The Ministry of Agriculture and Rural Affairs awarded safety certificates to the 17 crop varieties, according to a document on its website on Tuesday. The approved gene-edited crops include 2 soybean varieties, and 1 each of wheat, corn, and rice.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.